Let me also encourage Mayuresh Joshi to jump in. And Mayuresh, as we roll over from this financial year to the next financial year, what is on your radar for this week?
Morning, Nikunj. So clearly, I think what is going to happen with the RBI policy is going to determine the short-term movement of the markets. But clearly, what the markets are looking at is a re-rating in terms of earnings coming through. And again, I think the markets are cognizant of the fact that earnings are going to take at least a couple of quarters to revive along with the capex cycle. So if monsoons are expected to be better this time round, if that turns out to be the case, the rural demand, the rural discretionary spending will be much better than what we've probably seen over the past 2 years. And that will again have a cascading effect in terms of how the FMCG companies probably volume growth stands out over there. So clearly I think earnings, credit growth, capex cycle revival are the key themes for a restructuring or a re-rating of the markets. But from a short-term perspective, I think we will be following global cues. The global cues are positive for risk on assets at this point of time, equities included. So I think the consolidation at higher levels will continue for the equity market, specifically for India.
That's true. Okay, the other thing is, Sandeep Sabharwal, I think the big story for this morning today that we were talking about at least is the Accenture uptick in guidance. Now, you know, you could keep on arguing that how many Indian companies have a model like Accenture, and there will always be a point of debate there that, hey, the uptick is coming in because of different reasons. Will TCS benefit because of that? Will it not? So on and so forth. What is your thought? IT by and large looks to be stable. Is there an investment case in any of the names?
I think when we are looking at the guidance takeaway from such large companies, it should be a macro takeaway. We shouldn't go into micros too much that X will benefit or Y won't benefit. So there have been 3 news flows as I've seen over the last 10 days. First was the TCS analyst meet. Then was Capgemini came out with some guidance which was taken positively, and this is now Accenture. So all of them indicate positive growth prospects for most of the IT companies. And to that extent, they are very low risk plays. The only risk is that the rupee actually appreciates much more, which is not the base case. And I don't think that's going to happen in a big way in any case. So the IT story is strong. So one has to pick out which stocks you like. Among the larger ones, obviously TCS stands out about the way they have been guiding. And overall valuations on a relative basis have changed vis-a-vis Infosys and are much more attractive. So I think on the large cap IT space, TCS will be the best pick.
Anup, you got 2 strategies on Asian. You got two stock strategies rather, Asian Paints and Lupin. So walk us through the rationale.
See, Asian Paint is one stock where there is some sort of short built-up seen in last few trading sessions. All the stock has been taking support at around 840, 845 levels. But we feel that once the level is breached on the lower side of around 845, 840 levels, then we can see some swift downside coming in Asian Paints towards the expiry, and we can target a level of 815 to 820. The main rationale is, a lot of short positions being seen in Asian Paints on a higher level of around 855, 860, and the stock is also taking resistance at those levels. And the second stock, Lupin, we have been keeping sell on Lupin since the issue has cropped up, and from 1570, 1580 levels. Now, as Lupin has already corrected roughly around 200 points on the higher levels, we feel that it's always better to go with a strategy in Lupin, which is over here is a bear spread strategy. One can look to buy a 1500 put option and sell a 1450 put option and do a bear spread. We had seen a lot of short position getting created in Lupin on the higher levels of around 1550, 1560, and at these levels as well.
Okay, 8:45, that time on the show when we get you some more stock ideas. And CK, let me start off with the positional play that you've chosen.
Well, for a positional idea, I'm looking at SRF, and one of the main reasons is to look at the derivative side. As we get into the last week of the current series, I think stocks with high short OI are something to look at, and SRF is one such. We did see some amount of position dilution last week, but I think the position out there is still large, and plus SRF has actually staged an upside breakout. And if you examine the price data, I think a lot of shorting actually happened around 1250 levels, and now that stock has actually pushed past it, it would seem that we might have a bit of a flurry of short covering going on, and therefore I think this could be a good play with a stop placed at about 1225 or slightly below that, and we can look for a retest of the former highs, which are near around 1350. So it's a long play based upon derivative setup.
Okay, SRF is the chosen one. Look out for this one. Mitesh, Infosys, you have a call on this one.
I think, quite exciting in the sense that the stock has finally managed to break above that zone of 1180-85 and pressure and make a fresh high. I think, clearly suggests that there should be more momentum. Would recommend a buy here on a trading basis with a stop at 1189 for targets of 1245. And I also have a sell call on Marico, where we have seen some breakdowns on the intraday charts. Looks like some kind of profit booking activity will happen over here. So a short-term sell with a stop at 246 for targets close to about 231.
And Anup, let me come to you, since you also have a call on a Nifty, a strategy on a Nifty rather. You recommending buying or playing it via options. How?
See, Infosys we have already been recommending buy, and from here on we feel that there is a lot of open interest getting created in Infosys around 1240, 1260 levels of options. And as the stock has breached the important resistance level around 1180, 1185 around, we feel that one can look to go long on Infosys by buying a 1220 call option and selling a 1240 call option, that is a bull spread. It's seen a lot of open interest getting added on the positive side in last few trading sessions. So buy 1220 call option and sell a 1240 call option. The payout works out to be well over here, around 6 rupees is a risk, and on the higher side 13-14 rupees is what one can look out for on the profit side.
Well, Natco will have to deal with the FDA music once again, and Sandeep Sabharwal, company after company, stock after stock, it is getting affected because of US FDA problems, and there seems to be like a one-sided news flow. US FDA is inspecting all plants, they are raising concerns and they are raising observations, and companies where concerns have been raised in the past like a Wokhard or Sun Pharma, those problems are not getting resorted.
Yeah, I think two factors are playing negatively on the pharma stocks. One is that entire US FDA issue and the export problems, which all of them, I'm not sure whether any company is left. I mean, maybe one or two are left who are not facing this problem yet. The other is the entire regulation of the domestic industry, where the government is moving to regulate it more, regulate sales of many medicines, ban many combinations which have been there for rounds. So on one side, your domestic profitability will also get suppressed. And on the other side, you have export issues going on. And the main problem is that once these issues come up, they take as long as 6 to 9 months at least to resolve. So I'm betting on the entire PE ratio derating on this entire industry, at least for the next 1 year. And then subsequently we'll see whether these problems get resolved for good or whether they persist.
Yeah, I think Natco, by and large, is probably a stock that has still stayed stable over 52 weeks. I just said for the split, it's trading at 2,300 or thereabouts. And I think that's the level from where it started to move in the first place. So this is probably that one stock which hasn't really done too much damage to itself compared to a few others. So let's see if there is further damage here.
If you compare it to Lupin, it looks like a pretty chart.
Even Sun Pharma for that
Damage
matter,
will happen today.
Yeah, so that's what I'm saying. Maybe the damage could happen today in Natco Pharma. So do watch out for this one, 469 and counting. The other spate of news, Mayuresh, Joshi, I want you to come in on these, is Monsanto and Kaveri Seeds. Yes, there is a hearing today, but in Wednesday's session as well, the High Court was questioning why did Monsanto need to actually go to the Karnataka High Court before the other High Court decision came in. So a lot of legal opinions still to come in on this one. But between Kaveri and Monsanto Seeds, is it a very tricky proposition to either trade or invest in either of these?
Well, yes, Neeraj, and considering the legal overhang that these stocks are facing at this point of time, it doesn't make long-term investment sense unless these issues are sorted out. Secondly, I think what you're talking about in terms of the MRP being fixed specifically for these companies, that is going to have a toll in terms of how the effectiveness of their top line is going to move. And again, I think there are specific issues related to how the royalty payouts have happened specifically in the case of Kaveri Seeds. So clearly, I think now not looking at these companies, at least at this point of time, I think let the legal overhang get over, let there be further clarity on how the royalty is going to get accounted for, and then probably we'll have a look at these stocks. But at this point of time, I think clearly far better place in the market to look at.
What did exceptionally well on Wednesday was Just Dial. It's just one of those stocks where you don't know what's coming next and directionally which way the stock would move. But if I look at what Just Dial has done from the recent low, the 52-week low of Just Dial, it was sub 400 on an intraday basis. So a stock which was sub 400 has now retraced quite a bit from the recent low. And Mayuresh, how does one figure out a business like Just Dial? I've got 4 reports which are currently in favor of Just Dial. I've got 4 reports which are also indicating that for Just Dial, now there's the end of the road.
No, clearly, Nikunj, I think if you go back 5 to 6 years, I think the business model was very, very encouraging. And again, I think the kind of trends that the company was making inroads into, specifically on the digital space, I think that was very, very, very promising. However, I think with competition coming through, with the delay in launches that is happening on the new applet, both on the B2B part and the B2C part, add to that, I think the kind of employee expenses they have actually front-loaded this time around, I think it's going to take some amount of effort from the management side over the next few quarters to get their numbers in line. And again, numbers expected largely to be soft. So I think the margin compression that one really expects is expected to continue over the next few quarters as well. And though I think the business proposition as a whole in terms of a brand recall value remains extremely strong, I think competition pressures coming through is going to take a toll in terms of how innovative their business model is going to be going forward. So nothing wrong with the model per se, but again I think it's just the innovation part that is probably required. And again I think the delay probably in terms of launching both the B2B and the B2C platform is taking a toll on the return ratios.
Just Dial in the last 52 weeks has managed to lose about 45% thereabouts. But yeah, last week or the last 3 trading sessions at least, this was a relatively active one. Sandeep, the other pocket which held out very, very smartly was metals. I mean, do you still believe that this is just a trading play, or is there now fundamental reason on the table to go out and buy? There's news out in Tata Steel this morning saying that they're going to decide on the fate of 2 of their plants which have been beleaguered come tomorrow. So it seems like somewhere they're trying to get the act together, trying to cut off the ones which have a lot of debt pile.
I would say that, see, stock price movements do not, I don't think we should correlate what's going to happen in metals by the stock price movements. So we expected a significant trading bounce, because you have to look at from where these stocks have fallen.
Absolutely.
From where they have fallen, the bounce back is still not as much as what it can actually be. So I think the bounce back might continue for some more time. But the real demand globally for metals is not really recovering. Today also I read some news that steel, coal, etc., most of the demand patterns in China will be very, very soft this year, and the declines could be quite significant. So in that scenario, it's only supply cuts which could support the prices. And specifically in India, the steel stocks rallied after the MIP notification. I would think that these rallies are still trading rallies, but these trading rallies could go on for some more time. But investors should not allocate very significantly to these stocks.
So, you know, there's a 40% rally in NMDC from the lows. I was just looking at that one. 101 currently has rallied from almost 74 or 75 in the last couple of months. So it's been a serious trading rally. Sandeep Sabharwal is right. CK, I wanted to ask you about a derivative strategy on the Nifty, but I first want to come to you on the metal names. Which looks good for some more upside, albeit trading as it may be?
I think I would bet on Hindalco. I think that's the most improved stock and the most consistent in terms of its improvement. And, Vedanta is a close second. But Vedanta gives a little bit of extra palpitations to the trader because of the way it swings. I think Hindalco would be a decent bet. Seems to be in strong hands. Seems to be pretty consistent in the way that it moves up. And I would think, moving up from a price level somewhere around 90, 91, it's just about moving past short-term resistances. If it sustains, I think we could easily see it add on some about at least 5-6 rupees more from here. So I would place my bets on Hindalco.
Mayuresh, the common answer which we get from any market commentator on this forum when we ask about metal stocks is avoid them. Don't get this is the price action currently is just dashed for trash. Don't buy into them. But our markets undermining the importance of the MIP duty. The fact that MIP has been imposed, safeguard duty is at play. That will change the dynamics for steel companies which essentially have a strong domestic presence.
No, again, I think it's a very sentimentally positive move, and yes, I think over the longer period of time, I think these moves will benefit steel companies because I think the end product prices get raised. However, I think the inherent problem with the industry is the underlying demand, and demand is still extremely weak. So if you look at the numbers, Nikunj, on the first half itself of this fiscal year, the carryover inventory of finished goods and unfinished goods taken together is at a multi-year high. Now, if you account for that and if you look at realizations or the end prices being increased at this point of time, you're not going to really spur demand in a big way unless your inventory probably gets liquidated in some fashion. Add to that, I think the global prices still remain extremely weak, though you've seen a strong bounce back happen over the past few weeks. There is an inherent demand-supply mismatch happening in China as well, which is one of the biggest consumers of a lot of these metal commodities. So clearly, I think domestically, I think for a re-rating of these stocks, at least fundamentally, I think the demand volume have to come back, which probably we don't see unless the inventory issues probably are sorted out. And there is a structural change that probably happens from the end user industries, which we probably do not foresee at this point of time. So it's more of a structural or a tactical rally that you're probably seeing at this point of time with the bounce back in commodity prices. How long they'll sustain is a function again of how demand supply dynamics play out. So I think the next few months will be very interesting to watch out for.
Okay, just before we kickstart the pre-open session, Sandeep Sabharwal, a quick word on Kalpataru Power as well. That stock stood up about 5%. We were talking about it. Lots of order flows, even for its subsidiaries. Is it a good enough play to look at?
Yeah, I think so. And like I said, we are also holding this stock. And the order book has gone up to around 8,000 crores. JMC order book is also looking up. And there are also L1 and I believe 2,000 crores of further orders. So there's an order uptake which will lead to sales growth, and these orders are at a higher margin as per the management than the previous orders. So that will aid the margin growth. They don't need to do much of capex because they have enough capacities to sustain growth for the next 3-4 years. So I think it's a company in a way well placed. The sector outlook is looking up in the transmission and distribution side. And so overall outlook is good. Stock went up to 270, 280, corrected down to 180 odd. And now it's bounced back a bit, 20% with most of the mid caps. But fundamentally, things are pretty strong for this company.
Okay, stay on, gentlemen. So much more to speak about. About a minute left for the pre-open session to kick in. And let's just establish the trade setup. The SGX Nifty is indicating a level which would probably mean that the Nifty could start off flattish to maybe marginally off in trade. 7688 is what the SGX Nifty is indicating. We closed at 7716 on Wednesday, a day lesser of trade than the global market. So let's see how we start off in trade. Watch out for IT though. Infi and a few other that started a small move in Wednesday's session. It will be interesting to see if Nifty IT does support the markets today, in addition to the Bank Nifty, which has been supportive. Tata Steel could be an interesting one as well. Lots of news there, aside of the plans, the bid to buy some of the stressed assets of other companies as well, wherein both Tatas and JSWs are in focus. So do watch out for that. But do watch out for Natco Pharma. It's been that one mid-cap pharma name which probably hasn't corrected too much. Today could be a different day though for this one. Let's see. Minor observations on the Form 483, but it could disappoint the apple cart for Natco Pharma. The first rates though, on the pre-open, the Sensex a more believable flattish start, maybe two minor negatives as well. Bring up Tata Steel, bring up IT and bring up banks. I think this whole week banks will be in focus because of expiry and the lead up to the policy. So do watch out for these names. Tata Steel, flattish and start. Infi, TCS, Wipro, HCL Tech should be the other ones. And let's see if indeed the Accenture guidance uptake has a bit of a good move for these stocks. And lastly, from amongst the large caps, do watch out for the banks, as I said. SBI and the HDFC Twins, which had a fairly decent last week. Let's see if they are continuing in the same way. 1040 for HDFC Bank. HDFC for itself 1170.
Yeah, pharmaceuticals, it's all about them today. So start off with Natco, Glenmark as well, which of course has some positive news. They've got an ANDA nod for hydrochloride injection or so. So Glenmark starts off with a positive tick of about 1%. And Cipla as well, they've got the US FDA tentative nod for one of the drugs used to treat HIV/AIDS. So look out for that. And Lupin as well, which has also got a US FDA approval for one of the drugs. So let's see whether or not this rebound continues. And yeah, after getting so beaten down all of last week, Lupin finally is seeing some spot of green. It's holding out by about 1.6%. This stock, remember, got hammered in the last couple of trading sessions. Natco has now sunk a good 8% in just the pre-open rates as we speak. That's Natco, a disastrous start, much on expected lines. That's Natco in trade for you. For the Nifty, it's a tempered start, but we're clinging on to that 7,700 mark. So just a shade or so in the green as we speak. A couple of other stocks which are going to be in focus. And look out for what telecom as a sector may actually be doing. Considering you've got this latest round of spectrum auctions coming up pretty soon, or at least that is what the chatter is. It seems that the DOT is looking to commence the spectrum auction in now mid-July. Also with news that Reliance Jio launch is now being pushed back. So let's just look out for what telecom as a sector may be doing. But Yatin is here to tell us all about what the brokerage opinion is this Monday morning. Yatin?
Very important news coming in on BHEL. CLSA has come out with a note. They maintain a buy rating with a target price of 138 rupees per share. Now, the news bit is that BHEL has won a 10,500 crore order from NTPC Bangladesh Power Company joint venture. Basically, they are setting up a 1320 megawatt power project in Bangladesh, in which NTPC has a 50% interest. Now, CLSA believes that post this order, there will be a 55% growth in the order inflow. Also, going forward, FY17 order pipeline looks quite robust for a company like BHEL, and that comes on a very low base. So, going forward in the next 12 months or so, they're expecting the orders to pick up, especially from the government sector. And the most important point for this Maitri Power Project win is that they have won the bid versus L&T. So they have been quite competitive in the bid, and players like L&T are losing out to companies like BHEL. So BHEL at this point in time, given the fact that the earnings will pick up, the order inflows will pick up, CLSA is looking at a ray of hope. Probably on the earnings side, things should improve for the company in the next 12 months or so.
Yatin, thanks a lot for that. Frankly, I've heard this argument for the longest time now that incrementally for the power sector, things will improve. But my limiting point for BHEL is that there is enough and more surplus power capacity in the country right now. So if at all a segment which will benefit, it would be the T&D segment, not really the utility segment, because A, there is surplus capacity in the private sector. B, NTPC also currently is not working at very high plant load factor, which means when demand really comes back, they are also in a position really to ramp up. Sandeep, since you like Kalpataru transmission, I would throw in the other element. Power sector has two elements. One is the T&D, second is the generation. Should one still avoid buying into generation companies?
See, generation was always a bad sector to invest, irrespective of whether the demand is high or low. Because the regulations are such that high profiteering is not allowed, so prices go up too much, then there is too much noise. And when the prices are too low, no one is bothered. So that's what is happening today. I don't agree with that argument on surplus power actually, because the power is it looks surplus because one, the state utilities don't supply because they don't want to make incremental losses on every supply. Secondly, industrial activity is down. So as industrial activity picks up and these issues might get resolved after this Uday scheme, we will actually have a scenario where we might be looking at shortages 3-4 years down the line. Because if you see the last big ordering of power equipment on the thermal side happened 3-5 years back.
No, so go for BHEL or go for Kalpataru, because Kalpataru will benefit immediately. For BHEL, the demand to come back or equipment demand to come back, it will happen with a lag effect. So which is a better stock, BHEL or Kalpataru?
It's Kalpataru only, because BHEL will have its own issues to deal with this new finance, new wage bill implementation and all. So even if there's a turnover uptake, whether that will flow into the bottom line, we don't know.
Well, that's true. By the way, BHEL to akin to some of the other beaten down names, has had a bit of a rally from the lows. So arguably whether it's a trading rally or an investment rally. And of course, we'll have a really big discussion on this at about 9:30. Get in an ex-BHCL CMD as well to talk about what the fate of some of these cap good majors is likely to be like. As we speak though, the first 6-7 minutes of trade, there's some strength in Kesoram containing, remember the DT now exclusive, Hindustan Zinc is the other one which has had a decent enough start in trade today. We talk about metal names and this one is packing all the right notes, very close to its 52-week highs. And J. Kumar Infra is up about 5% in trade. Talk about they winning a very big order very, very soon. So that could be an interesting play as well. Mayuresh, what amongst the infra names? Because even in Wednesday's session, there were these limited infrastructure names which are doing rather well for themselves. Today, J. Kumar Infra has started off well. Anything in the construction, purely the construction space, which interests you as a team?
No, again, Neeraj, if I break that as construction stroke infrastructure, I think EPC theme is something that we're probably liking for the remainder part of this year. And clearly, I think what we're working out with is with kind of stalled projects probably getting underway, with new projects coming through specifically on the roads and highways side. A lot of companies catering to this part of the business are expected to do well. Now again, I think once the order flows start coming in, it's the execution that probably has been a worry for a lot of these companies. But again, I think as execution starts improving over the next few quarters, and again, it's a mix of how the play is for a lot of these EPC guys. So I think EPC plus BOT is something that is going to be very, very interesting going forward. And again, I think the roads minister has put it very, very clearly that if he puts through a hybrid annuity model, specifically on the BOT side, I think equity IRRs will improve significantly for a lot of these companies. So I think EPC as a theme is something that we're probably liking within the EPC players. I think we have remained extremely optimistic about players like KNR Construction, MBL Infra.
Mayuresh, good chatting with you. Thanks much for taking the time out and speaking to us today. While indicative of a mildly positive start today, but holding on to that 7,700 odd mark. Let's see where trade goes.